Is flipping gold a good idea in the short term? You might be surprised. Hey everyone, welcome to Campbell's Coins. I get a lot of great questions from the audience. This one is from an awesome viewer, Sean. He's always commenting and his support means a lot to me. He wanted to know why I don't sell my gold when it reaches highs, then buy back in when gold dips, constantly flipping metals to get out some gains. I gave him a short reply because my full answer has a lot of points and that would take too long for me to go into in a YouTube reply. I thought a video would be more apropos. So why don't I sell my gold when it reaches near highs and then buy back when the price drops? The short answer I gave Sean was, it's not worth it for me to chase those gains. Hindsight is always 20/20, but we can look at past trends to get a better picture of what I mean. When you buy gold from a dealer, there is a dealer premium attached to it. When demand for gold goes up, the premiums can expand because supplies are stretched thinner. For the gold that I prefer to buy, gold eagles and gold buffaloes, the 1 ounce sizes have an average of 7 to 9%. And when the demand drops, this premium also drops. I think I've seen them at like 3%, sometimes 6%. And when the demand drops, the premium drops. So I've seen them like 3 to 6% too. But typically it's in the 5 to 9% range. If you were to sell to that same shop, you're taking another hit in percentage. That shop isn't buying at the levels that they're selling. They need to keep the lights on, pay employees, pay rent, insurance, etc. So you're taking another hit when you go to sell. And let's take this year's example. We hit highs in the $2,000 range in 2023, and gold hit lows in the 1630s in October and November 2022. That's about a $400 spread, 22%. Except in October and November, demand was through the roof. I didn't see gold eagles or buffaloes below 1850. Most stuff was selling near 1900, even though spot was at 1630. Pretty big premiums. So unless you bought close to spot, which most are not, you're not making that much. If you were following me at the time, I posted about the J and Bullion and their 1 ounce gold bar for spot promotion that they were running. I got a couple bars for spot, but a lot of people missed that promotion because they feared gold would continue dropping. I'm sure a lot of people would have jumped on that deal if they knew where gold was heading in 2023. Back to the point. Even though spot was low, premiums weren't. So if I bought for $1,900 and sold for $2,000, I'm making a little, but not that much. If you sell a private party, your margins open up a bit, but you need to find a good buyer. There's more involved selling private party, safety concerns, shipping if the buyer is not in your area, package damage, theft, or loss. And you also have to contend with capital gains tax, and that goes for whether you're selling to the shop or you're selling private party. If you had insider knowledge on companies and current events like our politicians do, it's hard to fail. But most of us aren't scumbags creating laws to line our own pockets, and we can't invest the way that they do. By the way, check out Unusual Whales on Twitter and Instagram. They often post when our politicians purchase certain stocks, but more importantly, when they sell with Nostradamus accuracy before a company's stock begins to drop. All tangents aside, who's to say gold will drop back down to the 1600s? And at what point in time will that happen? No one knows. Maybe it does, but demand is so high, premiums remain high, and you're not able to get pieces for anything sub 1900. And that's if you're even able to get them. Does all that flipping seem worth it to you when gold is designed to be your insurance, your security? It doesn't to me. If you're looking to flip assets, there are better options and more gains to be made. Why give up your security for such a small gain, especially when it's purchased at a lower price or availability in the future isn't guaranteed? Among a long list of things that gold is to me, insurance and security are too. I don't want to give that up. I would rather use my cash and trade stocks if I wanted to chase gains, especially in the economic uncertainty we are currently in. If you watch my video with Leor Gantz, I asked him about 2008 compared to today, and his answer was really surprising. But one part I like to focus on is gold. In 2008, gold's price was sub $1,000. And this is with the worst economic crisis we had seen since the Great Depression. Today, gold is double 2008 levels, and we don't have any issues going on? Our banking system has never been stronger. Something to that effect.
Our banking system is sound and resilient with strong capital and liquidity.
This goes back to what I've always said before. Gold is a BS indicator. People know things aren't good, and they're getting gold to help protect them. Gold is not for short-term flipping. It's a longer hold, which is why I find it amusing when people are selling this asset for property or other things. At best, they are making meager gains. More than likely, they're breaking even or taking a loss. Just hold on to cash if that's what you want to do. Over the long term, metals perform really well. And this isn't to say you can't do well in the short term, but it's unlikely, especially with today's premiums. I hope this has been helpful to you, and it gives a bit of insight into my thinking as well. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.